will be talking about the Federal Reserve, the subject I chose because it does have a significant impact on our lives, and few people actually know what it does. Some of these things might sound a little bit complicated, but please stick with me. It is only 5 minutes. In the 1800s, the United States experimented twice with having a central bank. Both times, the banks were rejected because the system resulted in financial instability, price inflation, and fraud. But nevertheless, in 1907, without a central bank, the United States experienced the Panic of 1907. As a response to this, the 1913 Congress created the Federal Reserve, our current central bank, also known as the Fed. The Fed has 3 objectives for its function: keeping the unemployment rate low, stable inflation, and moderate interest rates. Now, this is a hefty task for any agency. How does the Fed plan to do all these things? Well, the Fed's primary tool is control over the interest rate, which is the rate at which you and the banks can borrow money from each other. In recent years, the Fed has kept the rate extremely low to encourage more borrowing and more spending. As a result, jobs are created, gas is applied into the economy, as they say. Any downside of the Federal Reserve is overshadowed by its benefits, and the Fed protects us from an otherwise volatile economy. According to its supporters, the Fed has been successful in achieving its objectives. Now, if that's true, and the Fed has been a success, then what would we expect to see in the data comparing the economy before the Fed and after? We'd expect to see fewer recessions, recessions less severe, and recessions that don't last as long. Alternatively, what would the situation have to look like for the supporters of the Fed to be wrong? Well, if the Fed hasn't helped things, then we'd expect recessions to occur at the same frequency and be just as bad or just as long. Now let's look at the numbers. According to the data from the National Bureau of Economic Research, the financial contractions since the start of the Federal Reserve have been just as severe, and the declines and recoveries in the economy have lasted about 6 months longer. The frequency of these contractions have not changed. So as it turns out, not only has the Federal Reserve not eradicated or shortened recessions, the recessions since the Fed have been worse, longer, and just as frequent. But wait, controlling the interest rate is not the only thing that the Fed does. Since the 2008 financial crisis, the Federal Reserve has begun a program called quantitative easing, or QE. QE is when the Federal Reserve creates billions of US dollars at the touch of a button, and then with that money buys mortgage-backed securities and US Treasury bonds from major investment banks. The theory behind this is that more money is now going into the economy, and buying treasuries also helps keep the long-term interest rate low. These major investment banks, in turn, reinvest that money into the economy by trading stocks and bonds. So the amount of money flowing from the Fed into these financial institutions and then essentially to the stock and bond markets causes the stock and bond market prices to rise. We've seen this in action. Since the QE has begun, we've seen a steady rise in the stock market, reaching record highs that we see today. Despite these record highs in the stock market, 57% of Americans still believe that we're in a recession, which demonstrates maybe the difference between what the QE program does for financial investors and what it is unable to do for most Americans. For the portion of Americans not working in finance or invested in the stock market, the creation of money in QE means price inflation. QE causes prices to rise, and these prices rise before your wages can catch up. Those most disadvantaged are the poor, or anyone living off a fixed income, and anyone who is saving money, such as those with retirement savings. Now, with this subject completely absent in political debate, maybe it's time that we question what we've been told is good for us or necessary for the economy. The subject of income inequality and the 1% are hot topics, but few people look into the major systemic issues that favor the few at the top at the direct expense of the many. I implore you to learn more about the Federal Reserve and its incredible influence over our lives. Thank you.